trillions of dollars will be printed and all markets will melt up. And I have some Ethereum targets over 20 to 30K, but not in this cycle. And before we get to the crypto space, we're gonna cover the macros and this liquidity game, because I've seen a lot of people that are living into an echo chamber, and that is the crypto space. But the majority of people do not realize that the crypto market, starting with Bitcoin, is just an extension from the traditional financial markets. Basically, we get liquidity depending on the rest of TradFi. So in this clip today, I'm going to talk about the next big pivot, which is a cyclical bear market for Bitcoin and crypto, and when it should arrive. But first, we're going to begin with the talk about this big printing that is coming, and I've talked about it since 2022, basing my first thoughts on the Fed balance sheet, because over there you can observe yourself that a big printing comes along with a massive buy-up of treasuries and securities by the Fed. So basically this was a post of mine in my native language, which is Romanian, and yes, I'm Romanian. This is my channel right here, feel free to subscribe. We don't have a lot of clips yet, so if you are new here, remember that so am I. Go subscribe and go binge watch all these clips, because you're gonna get my clear thought process, which is in my opinion paramount to understand how I look at the cycles and what we are talking about today, because today we're gonna talk about the big cycle, meaning the secular cycle, not the 4-year virtual coin cycles that everyone is speaking about. Those are just cyclical, and they melt up really fast, but also melt down very hard. And it's not because it's a scam or maybe a pyramid scheme or a Ponzi scheme, it's because of the lower liquidity. Bitcoin is still a 2 trillion market cap, comparing to the S&P index, which is a 50 trillion market cap. And even this asshole right here, since 2018, has increased also in volatility. This was a wipeout of something like 12 to 15 trillion. How do you wipe out 15 trillion and not call this a big volatility? So getting to our cycle talk, this is actually the Fed balance sheet 3 years later since my 2022 trade in November, just at the bottom of the crypto market. You can see here that every balance sheet increasing, meaning exponential increasing in a very low time frame, comes with a crisis. My thought process in 2022 was that the next crisis should be an energy crisis. I don't know how it would look and what they will tell us, but it's just going to be a narrative to print a lot of money and for the Fed to increase its balance sheet in an aggressive fashion. But then again, this crisis, if you can look at the charts, come with big drops. Same with the pandemic. And in my opinion, this should come something like the first half next year, by my calculations. If you follow me on Twitter, I have a pinned thread explaining when I think this should happen and how I measure cycles based on the bond market first, and then the Fed rates. And then if you remember our last clips, I've explained other recession indicators, and this recession is synonymous with this crisis right here and the exploding balance sheet increase. It doesn't matter how the US 10-year would go down, it doesn't matter the percentage, also the Fed rates, it doesn't matter if we go to 0 or maybe we stop at 2% Fed rates, keep it constant for a while, and from 2027, in my opinion, we should increase rates again, which this time, also in my opinion, would not be synonymous with 2022. It will be exactly the opposite. Meaning that if I'm right with my theory, we should have the rates bottoming out something like the start of Q2 next year, and then keep them constant for a while, and from 2027 we should increase them again, while the markets will do something like this, in my opinion. Unlike last time, because remember, the market never deals the same hand twice. It would be something like 2015, increasing, market going up, and then some volatility some 3 to 4 years later, which is the next Shemitah year, 2028 and 2029. People inside the crypto market will never look at this boring stuff and just say it's just another 4-year cycle. And if you saw my last post about this 4-year cycle, basing my cycle measurements on the S&P versus the gold chart, you will understand that there's no 4-year cycle. There are just secular bear cycles and secular bull cycles. And the SPX versus the gold chart is very telling for when the next big secular cycle should top, and we should enter another something like depression, big deflation, and that is something like 2034. You can see here that from 1929 we have a secular bear market for like 10 to 12 years until 1942, where the gold overperformance was over, and then the whole stock market began to melt up until the first signs of exhaustion, starting with 1966. We had something like a distribution top. That was the big difference between this secular top and the last secular top. And from 1980, again the gold overperformance was over, the stock market started its next secular bull market, and this whole thing lasted something like 34 years, just like before. And the next secular bear market lasted until 09, when again the gold overperformance was over. And I saw a lot of posts this year mainly, which said that the gold crushed stocks, which if you go back to 09 and put on this chart, it really tells you how people are full of shit, or they just look through a minimum lens, not seeing the bigger picture. The S&P is still overperforming gold since 09, and I think, in my opinion, if the cycles keep repeating, if us humans don't turn into a humanoid robot, or maybe we all die tragically in a cataclysm, I don't think cycles will ever change. And the S&P index and also the whole stock market will overperform gold until the next secular cycle is due, starting 2034 into 35-36, which is the next Shemitah year after 28-29. Just Google search Shemitah year, you will understand what I'm talking about. So basically, where we are in this cycle, and how are the crypto bros going to survive or make money going into the 34 secular cycle top. And also an interesting thing to mention is that right at this secular bear market bottom, in 09, in January, Bitcoin was released into the wild. Someone somewhere, meaning Satoshi Nakamoto, which in my opinion was a group chat, and also in my opinion, Elon Musk was part of that group chat. Why is that? Because in the 80s, if you follow up the cryptocurrency history, back in the 80s, some people started to engineer some solutions for some cryptocurrencies. Yes, back in the 80s. There was a lot of protocols and coins based on cryptography that failed until Bitcoin was launched into the wild and succeeded. Also in 1921, Henry Ford tried to engineer the same kind of energy coin to replace gold and stop wars. You heard it right, 1921. Just use ChatGPT to give you the whole story, because this is nuts. He tried to buy a big dam on the Tennessee River, but what he lacked back then in 1921 and also in the 80s, what we lacked as society was the internet era. That's why Bitcoin succeeded from 09 into the start of the next secular bull market. And the guys that invented it, in my opinion, they knew all about these cycles, because in 2034, Bitcoin will be mined 99% of all the coins. And from here, just 1% until the year 2140 will be mined. And you can call this the simulation or the matrix, but just understand that we are the matrix. If you ask me what are the cycles are us. We drive the cycles, our human behavior. This is not math, this is just psychology. But everyone forgets what happened in the past 20 to 30 years. That's why it's always happening again. So going through our cycle, in my opinion, when the Fed rates should reach their bottom, which will be something like Q2 next year, we would have the cyclical correction for the S&P index and also Bitcoin. And for the targets, if you ask me, I don't have specific targets for now, but in my opinion, we should see below 53K into this area right here, if you ask me now. Of course, the market is never a sure thing, which is why you should always be prepared to adapt on what the market is giving you as time passes by. But this is not a talk about the bear market or the cyclical correction. This is actually a talk about the shit coins we are holding in our portfolio. Because another thing I heard on crypto Twitter and also over YouTube is people comparing this lower rates era when the money was cheap and so on and so forth, and they are saying that if we are not at the bottom, no altcoin season should start. But they are not looking on the past cycle when the alt season happened and rates were hiked from 0% to 1.5%. Some people said, yeah, but the rates were lower here, just 1.5%. Now they are too high, 4.5%, and that means no cheap money or no money at all, which is another misconception. The cycle is the cycle, and it doesn't matter how high the rates were. Another misconception here would be that if rates are too high, the economy is worse. That is simply not true. When the rates grow, it means that institutions, individuals, they can pay the high rates. And you will see the people that rejoice this will cry over next year when the rates are cut and the markets are dumping, because they didn't understand this liquidity game and that the rates do not matter. And also the Fed is following the same cycle we are talking about here. They just monetize the cycle, and they are also participants to the market just like every other investor out there. Because if we only need QE to start pumping the coins, then how would you explain that in the rate hike era, Bitcoin did 100x, and in the rate cut era, Bitcoin only did 20x? And in my opinion, you will see that the next cycle, After we start hiking rates again, in my opinion, we would see monstrous evaluation all over the crypto space. Starting with Bitcoin, then Ethereum, then the strong DeFi projects, then the ISO coins, again going into this secular bull market top, which in my opinion should end after 2034, because the cycle is the cycle and it will always remain the same. So if you want to make money in this crypto land or in the stock market, you should always start with the big lens. Start to invest only after you understand where we are in the big cycle. And if you enter the crypto market, always start with Bitcoin, because if Bitcoin doesn't move first, nothing is moving. A lot of people were wrecked from here because they went all in altcoins instead of going to war with the biggest gun they got. And after they made their big gains, they should rotate, going down to Ethereum and other coins that underperformed for something like almost 3 years. That is the whale way. The whale do the same thing every cycle. They start with Bitcoin. After their big gains, they start to rotate and get their smaller gains with the lowest part of their portfolio, and then sell it to the normies that are now screaming, we need rate cuts, because if we don't have this, look at the last cycle, bro, we won't have this. But the truth is that this cycle is almost over. And after the next cyclical correction, in my opinion, the next cycle to 2028 and 2029 will be monstrous, truly monstrous, for these select altcoins that I'm mentioning here. And you can see in my trading view list, there's also a lot of shitcoins. But I'm always leaving 10 to maybe 15% into these low caps and forget about them just to check the price at the end of the cycle to dump them all. But my major attention and my major allocation lies in the DeFi space. Again, my favorite projects CRV and CVX. Next I got the IOTA chart, which is an ISO coin, and some other DeFi projects like Unizen protocol, Velo protocol since 2023. Chainlink is one project that I'm bullish on this cycle and also the next cycle into 2028. This should be the place where your major attention should lie, and then just speculate with 10% of your money in other shitcoins like gaming, AI, meme coins, etc. And maybe some companies like GME. I just got interested in the GME chart and I have a position for a major swing. Also, this Litecoin chart looks like the XRP chart before the, you know what we have now. And being an OG in this space, with all the shiny projects that appear every month in the crypto space, having the OG projects in your portfolio, in my opinion, is more safe. If you try to allocate your big bucks into these projects and just speculate with 10-20%, in my opinion, if you make 5 to 10x, maybe 15x on your whole portfolio, you would be perfectly set for the next cyclical correction and the best entries for the continuation of this secular bull market. Again, I'm repeating myself, into 2034. Go through the big lens first and then just bottleneck your attention into the crypto space, because it's important to know your destination, and this, in my opinion, is the GPS for the destination. That's it for today, guys. Just remember, smash the subscribe button, binge watch all the other clips. There's something like 12, and you will understand how I got to this position right now, because I made a lot of stupid mistakes back in 21 when I first got interested in the crypto space. Of course, right at the top, got lucky here, entered some big positions, made my first money here, but only got out 30% before this happened. And from here, I started to play along like a whale. First by understanding this liquidity game and the market GPS that I'm still training, I'm still learning, because this road, even if you know your destination, will be bumpy and the market will always try to shake you out no matter how convicted you are. Okay, so that's it for today. Be ready for my next clip whenever it comes out. And if you want more deep dives and market updates and also some daily conversation on the Discord channel, just check the description. Become a member and we'll talk more there. Have a great day and stay sharp. Cheers. Bye.